financial statements. The financial statements are business reports for a company that report the financial information internally, but then there are other financial statements that are used externally as well. So they're just written records. Remember, accounting is the language of business. So these records are information that convey the business activities and the financial performance of a company. Typically, this is over a period of time, over a month, a quarter, a year, whatever it may be. Accounting is divided into periods. There are four main financial statements: the income statement, the statement of retained earnings, the balance sheet, and the statement of cash flows. In this chapter, we really just cover the first three. So the income statement provides information about revenues and expenses. Revenues are the earnings from providing a good or a service. Expenses are the costs incurred to be able to sell the product or service. So if revenues minus expenses gives you a positive number, that's called net income. But if revenues minus expenses gives you a negative number, then that's called a net loss. The statement of retained earnings shows the change of retained earnings over the reporting period. So it starts with the beginning retained earnings, increases to equity, decreases to equity, and then ending retained earnings. So retained earnings is an equity account, first of all. And basically it represents the profit that stays in a company after everything else has been paid. So retained earnings are increased by net income and decreased by dividends. The balance sheet shows the financial position of a company at one specific point in time. So the income statement, for example, it shows the income and expenses for a whole period, whether that's a whole month, quarter, or year. Whereas with the balance sheet, it is as of one day, one specific point in time. You can look and see a company's assets, liabilities, and equity. And that's essentially what the balance sheet is a report representation of the accounting equation. So it lists all the assets on one side and then all the liabilities and equity on the other side. And then finally, the statement of cash flows. And the statement is exactly what it sounds like. It is showing cash inflows and outflows during the specific period. And cash flows can be separated into three different categories. Cash flows from operating activities, that's just like the day-to-day operation of the business. Cash flows from investing activities, so any investments, and cash flows from financing activities, such as a loan.